Hello everyone, this is Jimmy Singh, broker, owner of Supermax Realty. Welcome to my channel, Real Estate Edge with Jimmy Singh. Friends, in today's video, I like to talk about recent interest rate hikes, the challenges I see in the mortgage market, and all the gray clouds that are looming. So I will give you my honest, candid opinion in this short video. So as we all know, since the 2022 beginning, Bank of Canada has increased their overnight lending rate 6 times. They increased 3.45%, making the prime currently sitting at 5.95. So that prime rate, friends, impacts people who have variable mortgages, or they have floating line of credits, because all those payments change suddenly. For example, if somebody has a variable mortgage of $500,000 in January, their payment probably was $1,712, and right now their payment will be sitting at $2,773, because we have two kind of variable mortgage. I'll discuss more in detail. There's one variable mortgage where the payment remains the same. It's just the difference is you are paying more interest versus principal, whereby the other variable product, your payments actually increase and fluctuate based on prime rate. And after the meeting, the Bank of Canada governor said that we should expect as Canadians further rate hikes in the future, depending what is happening with the inflation. And I'm sure if you follow US dollar to Canadian dollar, right now the US dollar is sitting at 1.36 Canadian. So what that means is all the trading, all the import in Canada is done in US dollars. All the commodities around the world, they are traded in US dollars, meaning we will have to pay more for food and everything that is not made in Canada, meaning mortgage rates are up, food is up, gas is up. So there's a lot of pain for a lot of families. They're struggling. But as I said, I feel everybody was expecting 75 basis point rise. But the bank basically, I think they just got into some political pressure. So instead of 75 basis point, they just raised 50 basis point. See folks, if you follow US Federal Reserve rate hikes, last rate hike was 1%. So we were expecting 75 basis point, but I guess they chicken out at 50 basis point. But I see that the next meeting is coming up in December. So it is very probable we might see another rate hike. Can be 50 basis point, can be 25 basis point. So, only time will tell. Because the governor said, there is a short-term pain for a lot of families for long-term gains. And other thing we have to understand is, I am noticing in the marketplace a lot of people with very good fixed mortgage rates who are supposed to upsize or move. They are just staying put. The reason is they said, we have a good mortgage, sub 2% or 2.2% locked for next 2 to 3 years. And if they break the mortgage, right now the stress test is probably 7.2, 7.4%, because whatever is your contract rate plus 2%. So if the contract rate is 5.5, you add 2%, that is 7.5% to qualify for a mortgage. Meaning people who are supposed to upsize, they can now qualify for less loan. Hence, I see less supply coming on the market in winter months. And now let's talk about mortgage market challenges. The reason of making this video is only purely talk about the concerns and challenges I see in the marketplace, and I just want people to be aware of those. Lot of friends who know me, they know me as a real estate broker, selling real estate for last 18 plus years all around Greater Toronto area, London, Windsor, Kitchener-Waterloo. And they also know me as broker of record, meaning I own my own independent brokerage, and we have 19 agents who work at Supermax Realty. But many won't know me that I am also a licensed mortgage agent and I have license since 2006. So the reason of making this video, guys, in my field of business, mortgage or lending is very related to real estate sales. And I just want to educate my customers, so if they are in a situation, they should always know their options, or if they're shopping around for a good mortgage deals, they should actually call me for no obligation consultation to see what I can do. So more about that later in the video. So let's focus on some numbers. So friends, the biggest challenge I see in the marketplace is people whose mortgage renewals are coming up in next few months. So let me explain. So let's say if somebody bought a house worth 1.3 million, let's say in January, and now his house is down 900,000, meaning initially he might put 20% down for 1.3 million, making his mortgage 1,040,000 at 80% loan to value. And if the house prices have fallen and his mortgage is 900,000, and if he has a second mortgage on the property, right now the chance is the second private lender won't renew. And because his lending ratios, loan to value, is pretty much at 100%. So I remember, when the market was very bullish, a lot of private lenders were going at 85% loan to value. They are willing to lend up to 95% loan to value. But recently, a lot of private folks, they are scared of declining house values and lower appraisals. Now, some of the lenders, they are going 65% loan to value to be very conservative. Obviously, earlier this year, some people are giving mortgages at 6.99%. Now the same lenders are asking 9.9. So it is getting very, very costly, guys. And if that person can't make the payment, because they can't secure other piece of financing at the renewal, they have no option but to sell the house. Because those lenders will send you a notice of sale if they see themselves, getting in trouble, right? So make sure, don't wait till the last minute. If you have renewal coming in next 6 months, I encourage you to give me a call. My number is 647-961-2639. And, I work with a brokerage, which is one of the top brokerages in Canada, and they have all kind of different lenders: bank, credit unions, monoline lenders, and trust companies. So some of the lenders, folks, they are Scotia, TD, ICI Bank, First National, Duca Credit Union, Home Trust, Equitable Bank, First National, Merix Financial, Meridian Credit Union, MCAP, just to name a few. So we do have options. So don't sign a document at renewal, because right now I'm working on a file where the person, he's a self-employed guy, and then they are offering him a renewal rate of mid-6, but we're going to bring it way down in 5s. So as I said, you do have options. So don't sign the renewal letter, because most of the lenders, they wait till the last minute, and when you have like 10-15 days left for renewal, you will get that in mail, and you don't have much time to shop around, because typically some lenders, they need solid 10 days for every file to be finished. You have to be aware of that, folks. So it will save you thousands of dollars. Second thing I'm noticing is a lot of investors who were borrowing earlier for investments and everything, now they have seen their line of credits, minimum payments have substantially increased, and we can certainly see the impact in pre-construction market. And I'm pretty sure the builders are now noticing the value of investors, the importance of investors for real estate market. Another thing I want to talk about is, when the rates are higher, it pretty much slows down the demand and moderate household spending. Even businesses will spend less. I'm sure you notice when you go to a restaurant, you see the serving size is decreasing, and then obviously they're adding surcharge on top, just to survive this crazy market, right? And it is not only the real estate sales get impacted, there are a lot of other businesses. For example, I was driving through the site of a new construction yesterday. I met a contractor, and he feel concerned because he bought a house last year, and he said because the houses are pretty much very slow, and his supervisor said they might lay off some of the people who do roofing, framing for those houses. So a lot of families will get impacted in the housing slowdown. So those people might be prone to default on the mortgages if the rates suddenly go very high, or if they are not able to secure funding at the renewal. Second thing I like to talk about is historically, folks, it is not always doom and gloom. You know that I'm very cautious, optimist person. So if you study history of real estate, mostly real estate is very sound investment long term, right? And it is not very prone to fluctuation like stock market. Yes, last 2 years were crazy. We see the spike 30-40%, but that is not very normal, right? And we suddenly see the rents across Ontario, they are up 21%, double digit, right? So it's not, you can rent a house at a cheaper price, and the benefit of home ownership, I believe, makes better financial sense. If you have a stable job, you have savings, and you will be fine, because long term there's no point spending money in the rents. Short term, yes, if you're unstable, you're not sure you're going to live in a city, then it might make sense. So let's talk about some example, folks, especially variable mortgages. I'm going to talk about trigger rates. I'm sure a lot of audience in last couple of months are listening to trigger rate. So I'm going to reinforce what trigger rate actually means with the example. So let's say somebody has a $500,000 mortgage, and in January they had a prime -1. So in January the prime rate was 2.45, -1 meaning they're paying 1.45 on their mortgage. And for a $500,000 mortgage, their payment was approximately $1,700. So out of $1,700, $600 is going towards the interest, roughly $1,100 is going towards your principal. So what happened is, in September, when they start increasing the rates, now the prime was sitting as 5.45%. So if you have a 1% discount, it meaning your mortgage was now 4.45%. In that particular product, variable product, your payment is same. So you're still paying $1,700, but unfortunately, now your payment increased with $1,854. So what that means is you're paying actually all interest, no principal. And even your interest is risen so much, you're actually short $141 just to cover your interest only, with zero principal payment. So last night, when there was news about 50 basis point, I see some people were really happy. Oh, at least we have a 50 basis point rise, not 75. But in next few weeks, you will get some letters from the lenders, because some people have triggered their mortgage rates again, and those people have to have different options to catch up. So what you have to do is you have to be proactive, call your lender and ask them, is their rate triggered, because you have to read your contract to know what is the calculation, right? So at that particular time, you have a couple of options. First option is you can make a lump sum payment against your principal balance. Second is banks might pressurize you to have a fixed mortgage at this point of time. If you're too concerned, my recommendation is, yes, interest, it looks like keep going up, probably in December, maybe again in March or January, only time will tell. So just get a fixed, maybe 1 or 2 years, just to ride the wave. And hopefully, they are saying that by end of 2023, inflation will be close to 3%. And by 2024, it will be close to 2%. But those are all hypotheses and models, but only time will tell, right? So if you want to go fixed route, guys, I have some videos on my channel, Real Estate Edge with Jimmy Singh. Always know the penalties if you break a 5-year fixed versus when you break 5-year variable. There's a big difference on penalties. So always make sure. And if you know that in 2 years, your lifestyle or situation change, or you might have to relocate to different province, it makes sense for you to go with a smaller, shorter option. Third thing you want to do is you want to increase your mortgage payment just to pay outstanding principal. Because when you get a mortgage, they give you big amortization schedule where it shows during 5 years how much at the beginning you are paying interest and principal, how those ratios decrease. So they want to make sure whatever you agreed to, you are paying the principal. So call the bank, maybe increase $200, $300, $400 depending on your budget to cover those trigger rate extras. All in all, guys, every situation is unique. This is a very evolving market. I strongly encourage you to work with knowledgeable professionals who know what you're doing. And at the same time, you can always call me if you want advice on mortgages. If your renewal is coming in next 6 months, I strongly encourage you call us now, at least get the rate hold for next 3 months. The reason is, if right now we are qualifying you at a certain rate, in 6 months the rate will be way higher and you might be in a certain situation. And of course, if you have a private mortgage and it is upcoming for renewal in next 6 months and you're concerned, or you know that the person is not going to renew, and you are expecting maybe to switch your mortgage, and you're concerned about high fees involved, give us a call for no obligation consultation. You can always call me at 647-961-2639. We are open late evenings, we are open on weekends, and our office is based in London, 321 Springbank Drive. You can always visit my website, mymortgageshop.ca, to set up a meeting. I hope this video adds value to your life. Keep safe. God bless.